morning, everyone. Excuse me. Welcome, welcome, welcome. Just getting all my stuff pulled up here. Okay. Close this for a second. So today we've got Powell testifying live at 9 o'clock. I'm not sure how much that will move the market, but usually when he speaks, it moves the market. We're really close to all-time highs. So, yeah, we're just kind of watching. So far, what I'm seeing is this area is pretty significant for support. We got 1, 2, 3. If we bounce out of this fourth time, we'll show strong support there. Maybe hopping on and off today, or muting the mic quite a bit. Got the kiddo homesick today, so it's all good. Let's see. Oops. Looks like this Iran-Israel news is just a cluster. Between them and Trump, the three of them, just wreaking havoc. Every time I've entered a trade the last 2 weeks, I go back and I find out that someone has sent missiles towards somebody else, and it just happens to be when I'm entering a trade. Hasn't felt great because, yeah, it looks like Trump's got some spicy words this morning. He said we have two countries that have been fighting so long and so hard that they basically don't know what the bleep they're doing. Oh, no strong movement at the moment. I may spread it around here for a second. I have to turn that one off or it just screws up my other charts whenever I switch. Whoa. Amazon with that gap fill. Is it going to happen, though? So, like, minor transparency post. Some days it feels like, and a friend of mine was reminding me, he said, June is low volume, so you got to remember that. Take everything in stride. But it feels like some days the ones that I hold tend to be the losers, and the ones that I should hold are the winners. The ones that I cut short are the winners. Which I'm happy that I'm still profitable. I'm always, making sure that I'm profitable, but it's really all about consistency and having that practice. So it's like if you're, you got to have your stop loss be your stop loss and your target be your target. Not necessarily about holding longer or shorter. You need to have your target and you need to have your stop loss. I usually have my target, but I always cut it short. Because my account is so small. That's probably the biggest overarching factor. All right, we're moving up some. Maybe. We could just be doing this back and forth game till 9 o'clock. I am prepared to throw Powell up on the screen. Whenever he comes on at 9 o'clock. Let's see. No messages as of yet. Hazel, instead of saying you ask, can I have? The way you're doing it, you're telling mom and I what you can do instead of asking. Let's see. Alright, there's nothing in the way on the 30. Nothing in the way on the 1 hour. Nothing in the way on the 4 hour. Whoop. A little bit of resistance. But we've already tapped all the way into that. Boy, you got to go way back to see. So far, we're above everything. Got a little bit here on the 10. All right. Man, I used to just take that small little scalp right there and be like, ooh, I got from 126 to 128. That's a winner. I need the bigger moves. Be right back. Okay, I'm back. Okay, so 9 o'clock. We've got Powell testifying. I have no entry model yet for me. Just kind of waiting. Let's see. Sorry. Tesla. Nothing. Trying to study Tesla a little bit. I'm not sure how it interacts. Now, here's the overall thing to me. When I think about ES and NQ, I mean, Tesla's, I think it's an NQ. I think it's a NASDAQ thing. Yeah. Some of them, I feel like I get the bigger picture here. So even though sometimes it looks like a good setup, these other ones could dictate how that goes and make it not a great setup. NVIDIA looks like there's potential for something. Good Lord, maybe a short. Not realizing how far we are up there. I don't ever really play NVIDIA like that, so let's see. I'm just kind of looking around today. Just like the old phone in. Very obvious short. Usually, like I like to take the short whenever I see this candle wick above this white line. Or gray, whatever. It's technically gray, but it looks white. Yeah. So I got way on up there. Kind of like an oversold, overbought situation. They're just reversal zones. Let's see. Yeah, I'm kind of curious to see what that does to this 5-minute FVG. Let's go look at NVIDIA. Probably not going to take any trades on any of these other ones because I don't really. I feel like you should know your stock a little bit before you just jump in and start trading. What you got? Oop. All right, well, I'll come back. The NVIDIAs are very, very affordable. I mean, in relation to my account. Ooh, Amazon's flashing a sell. Kind of looks like the NVIDIA one though. Apple's already rolling down. Let's see if it takes this one out. A lot of room to run down if it takes this one out. Ooh. But there's still 3 minutes on this candle. That's like, you gotta watch those wicks, man. Nothing worse than getting wicked out. That's why I think screen time is one of your biggest assets. Biggest teaching tool is just having hours in front of the screen. Let's see if that pulled Amazon down. Nope. Nor did it pull Nvidia. Interesting. Looks like a dangerous play. Shorten these. Let's see, AMD. Trade. Ooh. It's a little on the high side. Oh, well, nah. So if I took, I'd take like 134, 133. I think I'm going to paper. So just because I want to test it, I'm going to test it with you guys. I'm going to paper trade this one on my Webull account. This is to teach you that it's okay to paper trade. This trade specifically is a paper trade, by the way. So because it looks so overbought, we're just going to see. We're going to see. I'm going to do what I would do on my normal account. I'm going to take the 133s. I'm just going to buy one. This is strictly just to see. How this reversal zone works with a stock like this. See, because yesterday it looks like it. We'll see. We'll just see. We'll see. I'm going to hold this one too. All right, we're back to ES. Okay. So it looks like coming back down in this area to test support a fourth time. No, a fifth time. Hit the hourly high on open. Now can we come and take out the lows? I don't think that ceasefire news was as bullish as people might think. Looks like that AMD is still climbing. What is the NASDAQ as a whole doing? I mean, if the NASDAQ can come and take out lows, that AMD will probably be in profit. It's down $11 right now. Again, that is a paper trade. Strictly testing something. I am not seeing anything at the moment that's making me want to take any trades on my real account. Oh, here we go. 3 minutes, and we've got Powell coming up. Let me see if I can get this ready. Trying to find a feed for it. So far, all I have is one guy who's live, but it's not actual. Oh, wait a minute. Here we go. Looks like this will be live in 2 minutes. All right. Mute it. And it'll be in the bottom left-hand corner of your screen. I'm not going to throw it up there until we got it on screen. So Powell today is going to, let's see. Yes, today's June 24th. Powell will be talking about rate cuts, soaring inflation, and Trump pressure. That's what it says on here. All right. You may say something funny because of the way I have to switch through screens. It might minimize the screen for a split second, so don't freak out. I'm not going to put it up, though, until I see him talking. So far, I see nothing. So it'll look a little bit like this. Let's see. So I'm going to add to this indicator that I've made and kind of make it, what do they call it? Orb opening range. So a lot of people trade that opening range breakout thing. Just to add some things that you can toggle on and off. You can toggle on and off this 4 hour, all this stuff, weekly, daily. I don't mind having that on. But like for mornings, more of day of stuff. So maybe pre-market high, pre-market low, opening range high, opening range low. Just stuff that can kind of help you track the day a little better. It's not that that information is not within this 4 hour, 1 hour, but there's some stuff that needs to, I just think it could be beneficial. So I will be working on that. Be version 3 of this, I guess. Excuse me. Go ahead. Let's see if Papa Powell's talking. Nothing yet. Yeah, I think we're going to be good. I have my screen cut off there. Oh, I see. Sorry, I'm looking at my own screen. This stuff is pretty boring so far. Let's check in on the Weeble trade. Man, still going up. Down 20 on that one now. Let's see. Yeah, I think I'm about to cut it. I'll see if Powell can if Powell can't demolish it with his words. He's pretty good at that. I'll probably cut it. Again, the AMD was a paper trade just to test that reversal zone theory. Clearly doesn't work well on that. All right. How are we looking? Oh, it looks like we're live. All right, here we go.
Toward a recession. However, the facts tell a different story. 4 months into the Trump administration, American workers and taxpayers are already benefiting from a strong, resilient economy. The Fed noted that growth is solid, and even former Fed officials have dismissed the idea of a recession this year or is near. Compare that to the previous administration. Under President Biden, Americans endured the highest inflation rates in decades, driven by reckless spending and misguided policy decisions. Now, under the Trump administration, inflation has declined to levels lower than those seen before President Biden's flawed so-called American Rescue Plan, and real wages are finally meaningfully growing again. There's always some economic uncertainty when the United States engages in difficult negotiations necessary to secure more open markets for American goods and services. But that uncertainty is not without a strategy of balanced lower regulatory costs, pro-growth tax policy, and controls on federal spending, all combined with trade successes offer economic opportunity. One Fed official, Governor Waller, has outlined how a balanced approach combining potential tax rates with targeted tariffs could foster strong economic growth. Let me be clear on that point. We can fight to open markets, break down non-tariff barriers while achieving solid economic growth at the same time. That's President Trump's goal, just as it was for President Reagan in the 1980s. I also want to commend you, Mr. Chairman, the Federal Reserve, for taking positive steps to keep politics out of the Fed, including disbanding 4 internal climate-related committees and making the Fed leaner and more efficient by right-sizing your workforce across the system. These moves
just so you know, I
reflect
probably
a
will
commitment
talk
to
over this at
efficiency
points.
at the Federal Reserve. I'm also pleased that Governor Mickey Bowman has been confirmed as Vice Chair for Supervision at the board. Governor Bowman has been a tireless advocate for community banks, and this committee is eager to work with her on policies that enhance our bank's ability to provide greater access to capital and services for our families and businesses across our nation. I look forward to today's hearing, and I yield back the balance of my time. I'll now recognize Mr. Foster on behalf of the ranking member for 4 minutes for an opening statement.
Thank you, and I will save everyone a little bit of time. Ranking Member Waters was unavoidably detained. I'll just say a little bit that the markets have kind of spoken on their confidence in the Trump economy. Probably the single simplest metric of that is that the U.S. dollar is down roughly 10%. Okay, this is not a small thing, and it has caused countries around the world to question the primacy of the U.S. dollar going forward. This is one of the worst market responses, I think, to the chaos that we're seeing, the tariffs that are very destructive to international trade, and just everything that you know, the markets are seeing and trying to suffer through. I know I'm contacted all the time by businesses in my district, manufacturing businesses that can't even start thinking about investing with the level of chaos just from the tariff policy alone. Anyway, there's a long set of things we should be talking about, and I'm happy to save some people some time, and let's get to it. Yield back.
Gentleman yields back. I recognize the chairman of the Task Force on Monetary Policy, Treasury Market Resilience, and Economic Prosperity, Mr. Lucas, for 1 minute for an opening statement.
Thank you, Mr. Chairman. Today's hearing will allow us to evaluate the state of the economy and review the FOMC's policy decisions. It's appropriate to regularly take a step back and assess the central bank's performance and its responsiveness to the economic conditions our constituents face back home. This hearing is particularly timely conversation as the Fed wraps up its 5-year framework review, including a thorough look at the consensus statement, communication strategy, and other guiding policies that will have a profound effect on the lives of every American. Many of these topics we'll discuss today we've taken a closer look at in the Monetary Policy, Treasury Market Resilience, and Economic Prosperity Task Force. I look forward to building on these conversations here. One issue that I think warrants special attention is the binding nature of the SLR and ESLR on the Treasury market intermediation. I'm glad to see the Fed is looking into this tomorrow, and I hope we'll see meaningful action soon. Chairman Powell, thank you for being here. It's critically important that Congress and the central bank have an open dialogue. Transparency, accountability, honest communications are pillars of our system's success. I look forward to your testimony on the state of the economy and the Fed's plans for the future. And I yield back, Mr. Chairman.
Gentleman yields back. I recognize the ranking member of the Task Force on Monetary Policy, Treasury Market Resilience, and Economic Prosperity, Mr. Vargas, for 1 minute for an opening statement.
Thank you very much, Mr. Chairman and Ranking Member, and thank you, Chairman Powell, both for your years of public service and for being here today. Since 1977, the Fed has been tasked by Congress with its dual mandate goals of achieving both maximum employment and stable prices. Unfortunately, this administration has made accomplishing these goals more difficult. In the Fed's most recent summary of economic projections, we see a forecast for slower growth, stickier inflation, and rising unemployment, all of which point to a potential stagflation scenario. Whether it's the president's indecision on trade policy, his hiring freezes impacting the collection of economic data, his ballooning of the deficit to cut taxes for the wealthy, or his name-calling, all of these actions make it tougher for the Fed to do its job. I look forward to your testimony today, Mr. Powell, Chairman Powell, and I yield back with that.
Gentleman yields back. Today we do welcome the testimony of the Honorable Jerome Powell, Chair of the Board of Governors of the Federal Reserve System. Chairman Powell, we thank you for taking time to be with us. You'll be recognized for 5 minutes to give an oral presentation of your written testimony, and without objection, your written testimony will be made part of the record. You're now recognized for 5 minutes. Myke?
I didn't even check to see what the SPY premiums look like.
Thank you, Chairman Hill, Ranking Member, and other members of the committee. It's great to be back here today. I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer-run objective.
Premiums aren't juiced, so that it doesn't look like they're expecting much movement.
I will review the current economic situation
testimony
before
today.
turning to monetary policy. Incoming data suggests that the economy remains solid. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were driven by businesses bringing in imports ahead of potential tariffs. This unusual swing has complicated GDP measurement. Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 2.5% rate. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a decline in sentiment in recent months and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged a moderate 224,000 per month in the first 5 months of the year. The unemployment rate at 4.2% in May remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that the conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow longstanding disparities in employment and earnings across demographic groups. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total personal consumption expenditures, or PCE prices, rose 2.3% over the 12 months ending in May, and that, excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up over recent months, as reflected in both market and survey-based measures. Respondents to surveys of consumers, businesses, and professional forecasters point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. With the labor market at or near maximum employment and inflation remaining somewhat elevated, the Federal Open Market Committee has maintained the target range for the federal funds rate at 4.25% to 4.5% since the beginning of the year. We've also continued to reduce our holdings of Treasury and agency mortgage-backed securities, and beginning in April, further slowed the pace of this decline to facilitate a smooth transition to ample reserve balances. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Policy changes continue to evolve, and their effects on the economy remain uncertain. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of the related economic effects, reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that would depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you, Mr. Chairman. We'll now turn to member questions. I recognize myself for 5 minutes for questions. Over the past few weeks, our Democratic colleagues have suggested the following: after the initial release of the GDP report, the president is driving the economy into a recession. Chairman Powell, the latest FOMC statement described economic activity had to continue to expand at a solid pace, and you just reiterated that in your testimony this morning. In your view, is the term recession and the economy growing at a solid pace, are those synonymous with each other?
I would say no.
And you note that the labor market continues strong, the economy's at a standard pace, and you also referenced in your testimony that first quarter GDP initial react was also from front-end loading, as you noted, imports to try to avoid tariff impacts. Also, I looked at the Atlanta Fed GDP Now model, which forecasts GDP growth for the second quarter of this year at nearly 4%, with core GDP forecast at 2%. Does that Atlanta model suggest a recession to you?
No, I would say it doesn't.
So in looking at your remarks about tariffs today and then the ones that you made during March and April, I was looking back at a Fed study that noted that up until March, tariffs have already been partially passed through in consumer prices, leading to a contribution of merely 1/10 percentage point increase in core PCE prices. And a Harvard study last week showed that prices have only modestly adjusted since the announcement of tariffs. Finally, the longer-term inflation expectations remain consistent with the 2% goal. Governor Waller laid out a pathway that allows for rate cuts provided that average effective tariff rates remain close to 10%, or I assume he means 10% or lower. The labor market remains solid, prices continue to disinflate. So given that data I've outlined, I'm sure data that you're very familiar with, for the economy to avoid persistent inflation, do you concur with Governor Waller that there is a pathway for good news as it relates to the regulatory policies, the tax policies that I've discussed in a world with lower tariff rates?
So first, I wouldn't comment on any other FOMC members' comments one way or the other, but I will say this. I think many paths are possible here, and certainly the one you mentioned is a possible one. We could see inflation come in not as strong as we expect, and if that were the case, that would tend to suggest cutting sooner. We could see the labor market weakening, and that would also suggest cutting sooner. On the other hand, if we see inflation coming in higher, or if the labor market were to remain strong, then we would probably be moving later. So I think a range of possible paths are possible, and certainly the one you mentioned is one of them.
In February of 2021, you told us in this committee that you would stay in your lane and not comment on President Biden's proposal for the American Rescue Plan or sharply increasing federal spending. And you said it was an issue, but that you would stay in your lane and not comment on it. But here in this year, you have commented on this idea of tariffs being set by the executive branch. So are tariffs in your lane, but a huge fiscal spending by the Biden administration not in your lane? Explain to the committee why you chose
I'm going to let this play a little
to be
more.
silent in February
right
of
back.
21, but outspoken this spring.
Still not going anywhere
we
at the
haven't commented,
moment.
and it would be inappropriate for us to comment. And we just wouldn't do that. And just as we wouldn't comment on the reconciliation package that you're working on right now. We're not commenting on tariffs. What our job is inflation, keeping inflation under control, and also keeping maximum employment. And when policies have what appear to be short and medium term implications, meaningful implications for that, then they kind of, not the policies themselves, but the inflation becomes our job.
Yeah. You know my views on price stability. I think it's a first among equals in your dual mandate. I've argued for that. I've introduced legislation to make the dual mandate the sole mandate, and we've talked about that before. But I was very curious about your thoughts on former president of the Cleveland Bank, Loretta Mester's quote that I read from last fall. She says, "I think that maximum employment is the maximum level of employment consistent with price stability." In other words, she elegantly ties that together, that price stability is what you can have more control over rather than all these other factors that enter the employment picture like legislative and executive branch. What's your thought about her quote?
I personally think that's a very reasonable way to think about it.
Thank you very much. I yield back.
We're moving
The gentleman from New York
up a little
is
bit.
recognized for 5 minutes.
Thank you, Mr. Chairman.
We're
Good
still
morning,
kind of in
Mr.
this-
Chair, Chair Powell, and thank
Excuse
you for
me,
being
in this
here.
range of
Last week, the
130
FOMC decided to maintain the
to
target
109.
range for the federal funds rate at 4.25% to 4.5%. While I was not surprised by the decision to hold rates steady, I was surprised by the committee's revised forecast since March, which represented a decrease of 0.3 percentage points for GDP, a similar increase for core PCE, and an uptick in the unemployment rate to 4.5%. Can you explain the incoming data that the committee has seen since March that caused it to make these adjustments?
Sure. So first of all, these are individual. This is not a committee forecast. These are just individuals submitting their own personal forecasts, and we don't bless those as a committee. But I think people are looking at the incoming data and having a range of different judgments. If you look at the range, if you look at the central tendency, you'll see that it covers quite a wide range. Those are the medians that you're talking about. I think so. Inflation is projected to have moved up because of what we've seen, particularly from tariffs. And I think if you look at other outside forecasters, you'll see very much the same thing.
And what data are you looking for?
Well, we look at the incoming data on, we look at our own forecast, and we ask ourselves what's likely to happen. Monetary policy has to be forward-looking. A forecast is a prediction of what's going to happen in the future.
Thank you. In its statement, the committee announced that it will continue to monitor the implications of incoming data and adjust the stand of monetary policy as appropriate. Some analysts predict 2 rate cuts by the end of the year are still on the table. Is this a fair and accurate assumption?
Here's what everybody's
and
looking
what
for.
incoming data will the committee need to see to consider these cuts?
What will actually happen with rates is going to depend on the path of the economy, and that's highly uncertain. So I would just say what that means at this moment in time is that a significant majority of the committee, but also there's a pretty significant minority that doesn't agree, but a significant majority feels it will be appropriate to reduce rates later this year. And what that means is that each of those persons who wrote down a cut in rates later this year, they think that there's some state of the world where inflation doesn't prove to be as high, or the labor market weakens, or some combination of those two things, that it will turn out to be more likely than not appropriate to reduce policy rates, subject to great uncertainty. I mean, we will, the story has been evolving, and our thinking has been adapting, and that will continue.
Thank you.
So, long
Chair
story short,
Powell,
I have no idea.
Although a ceasefire has been tentatively reached in the Middle East, the situation still has the potential to open global and energy markets, especially if the ceasefire is broken, while at this
Which it's
point
already
Iran
sounded
is
like it
seen
has been.
as unlikely to close the Strait of Hormuz. That decision could change. How is the Fed assessing the current situation and incorporating those assessments as it considers future adjustment to economic projections and its stand on monetary policy?
So I think it's too early to know what any economic implications might be, and I would not want to speculate. Like everyone else, we are, of course, watching the situation.
Thank you. And Chair Powell, after reviewing the economic data following the meeting last week, it seems to me that the committee is indicating that we could be headed for a situation where inflation accelerates while unemployment rises and growth become more sluggish. In this scenario, this will put the Fed's dual mandate of maximum employment and price stability in tension with one another. In this scenario, how does the Fed balance these priorities in order to achieve both mandates?
So let me say that we're not facing that right now, and that isn't really our forecast that we will face such an issue in a serious way. But if that does happen, then what we do is we look at the two goals and we see which one of them is farther from its goal.
An hour.
Two variables, is maximum employment or price stability farther from its
$20
goal.
lost.
And we prefer the one that's farther than its
Paper
goal. And then
money.
we also
This
ask
was a
ourselves,
paper trade
how
again.
quickly will they return to goal?
Emphasize.
It's a very difficult situation for any central bank, and I would say again we're not in that situation right now.
Thank you, Mr. Chairman. Yield back.
The gentleman's time has expired. The Vice Chairman of the full committee, Mr. Heising of Michigan, is recognized for 5 minutes.
Thank you, Chair Hill and Chair Powell. Good to see you again. I got a lot to cover, so we're going to try
Only
and
lost
keep this
15.
concise.
Oh.
But following up a bit on what Chair Hill had been talking about, you had said in January 29, 2025, quote, "We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy."
Even if I
would add energy
needed
into
to
that,
get
by the way.
down to
We need to
here,
let those policies be
down to here
articulated
to make a
before we can
difference.
even begin to make a plausible assessment of what their
It's whatever.
implications for the economy will
It was
be.
a paper
This is
trade.
no different than any set of policy changes at the beginning of the administration. However, December 18 of 2024 at the FOMC press conference, you noted, and I'm paraphrasing, that some Federal Reserve officials began to incorporate preliminary conditional estimates of how fiscal policies might impact the economy into their forecasts. this seems inconsistent, and I sidebarred with the chair to say, okay, did I hear this correctly, his question and sort of your answer? What I heard is that there was a belief that the IRA would not be inflationary, but that tariffs could be, therefore, suddenly you and others were commenting on tariffs. And for the institution, I know you try to be consensus-driven. Why are there FOMC participants making fiscal policy assumptions into their forecasting when you yourself said that fiscal policies need to be articulated before the FOMC can make a plausible assessment into their implications, what those will be? And I think if there's different participants having different assumptions, that would render the SEP, Summary of Economic Projections, biased, meaningless, useless, less impactful, and when you're not comparing apples to apples. So wouldn't it make more sense for all the forecasters to make the same fiscal policy assumptions at the same time? Or if not, shouldn't each participant disclose what assumptions that they're using and building into that? So here's the question.
So that's a great question. That really, when the Summary of Economic Projections was originally designed and put into effect in this way, the way it works is that individuals are free to make whatever assumptions they want, and they do disclose them. They disclose them in their speeches and things like that. So there will be situations where some people incorporate.
Feels like we're going to range back and forth until this is over.
You know, we try to be transparent about that. But
I could be wrong.
That's kind of the way it works. When I say we don't take it into account, I'm really talking about policy and the committee as a whole, where we won't take things into account until we know.
And you believe that?
I mean, if you look at VWAP here, we're just bouncing back and forth between it. So.
Well, I think they do that in their speeches. Yeah, each people go out. You may have noticed there are a lot of speeches.
I guess the opaqueness of the Fed has been something over the arc of my 15 years on this committee, has been one that has been debated greatly, including auditing the Fed and a number of other things that have gone on. I've got here a brief moment. I do feel like I need to touch on interest rates. Not to be a shock, you asked how the family business was doing back in Michigan. Families involved in sand and gravel and aggregates and construction and things like that. It's been strong. We need more labor. We need a few other things on that, what's happening. But I mean, I think there's no recession. That's been established. There's no hyperinflation, or certainly not as what some had been projecting. Yet there seems to be higher than expected, or certainly desired, interest rates for many of us. And I'm curious how high interest rates, they hurt Americans who are paying car loans, credit cards, mortgages. Just this morning, you had FHFA Director Pulte asking for lower interest rates, which would obviously impact home buyers as well.
That'd be great.
So what is it that's keeping, in your mind, the Fed from what many of us believe is the right thing to do, which is to lower some interest rates, and by the way, match what the Bank of Canada, Bank of England, the European Central Bank, the Swiss Central Bank, a number of emerging central banks. By the way, that's your own assessment on page 33, as where you're laying that out. Why aren't we doing what the rest of the world is doing? Is it because we're at full employment? Is it because of those tariffs concerns that you said weren't part of the analysis? Was it energy, groceries, durable goods? Why?
So you're right that if you just look in the rearview mirror and look at the existing data that we've seen, you can make a good argument that would call for us to be at a neutral level, which would be, a couple of cuts or maybe more kind of thing. The reason we're not is the forecast by all professional forecasters that I know of on the outside and the Fed do expect a meaningful increase in inflation over the course of this year. When I said we weren't going to talk about tariffs and inflation, that was to say until we see what the policies are. And so now we know a lot more. It's 6 months since I said that. So anyway, I'd be happy to continue this with you.
Thank you.
Gentleman's time has expired. Gentleman from Michigan, Ms. Tlaib is recognized for 5 minutes.
Thank you so much, Mr. Chairman. Chair Powell, last month there was research published in the Journal of Urban Health that found that more than half of Black women of reproductive age, that's the term they use, in the counties that I represent, that had experienced some sort of eviction during their lifetime. So that's like 50% of black women in the two largest county, Wayne County and Oakland County in Michigan. And these numbers are horrific. As you know, were you aware of that?
No, I was not.
And you know, evictions are often very traumatic experience, but also
Nor does he care,
it
probably.
creates a cycle of poverty, but also this instability for many families. But especially when it comes to a lot of our black neighbors, the access to equity, the access to housing is diminished even more. In Michigan, we lost more black home ownership than any other state in the country during the last recession. So we know the housing crisis, I believe, is structural, and some may say it's a policy choice. While there are many factors at play, and you know this, Chairman.
I say that being biracial
high mortgage
myself.
rates, the finance rates, and so forth, that drag the supply of new housing. But last month, new housing hit a 5-year low. Are you familiar with that?
I'm not sure exactly what statistic you are referring to.
Okay, I don't know. There was all this
I don't
articles
know.
about the housing market and the impact of tariffs and so forth, and they said
Yeah, you should
again, it
probably
hit
have that
5-year low.
information.
And again, I'm getting this from a source, but
What
it
source?
sets the market up for higher
This is why
inflation.
journalism is dead.
And more burdensome housing costs to years to come. So Chairman Powell, you know, I'm looking at this monetary whatever policy framework that you guys have put together. Do you think that the way it's structured, and again, I'm trying to understand how you're looking at this in the housing crisis, do you believe it's eroding new rental supply under construction right now, leading to high inflation in future years?
So I think there are two things going on quickly. One is just there's a longer run shortage of housing in the United States, which there's nothing that the Fed can do about. That's not something we can affect.
Well,
There's also, if I may say, in the short run, rates are high, and that's going to weigh on housing activity. But the best thing we can do for the housing market, the absolute best thing, is to restore price stability so that rates come down and so that rates can be at a
But
level
don't you
that
think
people
that
can
the
afford.
restrictive monetary policy the framework you all put together undermines long-term price stability right now by reducing the supply?
No, I mean, I think
But
it
you're
restores
reducing
restores
supply.
price stability. The point of higher rates is to, and
So
and
you don't
it
think
does
the
affect.
higher rates is impacting future supply of housing?
So I think what that does is, I think interest-sensitive sectors like housing are very much directly affected when we cut rates or when we raise rates. That's right. But that's part of the mechanism for restoring general price stability.
So keeping the high interest rates does not impact future supply of housing?
It does not, over the long.
I need to go back to talk to
Over the long run,
women that the
the
study.
Fed will not be, our policy will not be a driver of longer run
I
housing
get
supply.
annoyed by people
So,
who
okay,
do this.
let
I
me
may
ask
not
you, what is
agree
the
with
difference?
him.
I'm honestly confused. I want to learn here, and I'm sure people listening to this want to learn. What is the difference between demand-driven rent inflation and supply-driven rent inflation? Like, you guys use these terminology. What is that? How do I communicate that to the public? What is the difference between
It's exactly who I thought it was.
supply-driven
I'm not looking
versus
at the
demand-driven
video. I'm
rent?
looking at the
You know,
chart.
those are not terms that we use particularly often.
What's
but
supply-driven formula? You guys-
that would mean that there's not enough supply to meet demand. But at the same time, it also means there's more demand than there is supply.
So are you guys ignoring that?
No, but as I said again, our policies will not affect in the long run.
No, I'm being
either
serious,
demand
'cause I
or
see somebody
supply
behind you
in
kind of
housing.
shaking. I'm being serious, y'all. We're talking about a housing crisis that is getting worse right now because we're not paying attention to future instability that the current rates, and you can raise your eyebrows and all this stuff behind. I don't know. I mean, do you understand? Like, I come from a community right now that I believe is now being impacted by the current framework that you're putting together, that I do feel like it's going to be long-term effects on the housing crisis, and you're ignoring it.
No, we're not, actually. We think the very best thing we can do is to fully restore price stability at the aggregate level. That will be the best thing for homeowners and for home
Even though the
builders and
housing
everybody
supply
else.
has been
In the
impacted by the
long
high
run, that
interest-
is the single
But
thing
Chairman
that
Powell,
Congress
you
has
see where I'm
assigned us
coming
to
from.
do.
But you see where I'm coming from. It is impacting future supply
No.
of housing, right?
Not in the long run, no.
All right, let me give us
Okay,
Gentlewoman's
well, Mr.
time
Chair,
has
thank you.
expired.
thank God, 5 more minutes.
The gentleman from Wisconsin, Mr. Stile, who's also the chair of our
still
Subcommittee on
talking.
Digital Assets, Financial Technology, and Artificial Intelligence. You're recognized for 5 minutes.
Thank you, Chairman Hill. Thank you, Chairman Powell, for
Good
being
Lord.
with us today. I want to dive into 2 actions the Fed's recently taken. to get a little additional
right.
color on. Yesterday,
End it.
the Fed announced that reputational risk would no longer be a component in bank exams. I viewed that positively. I viewed the reputational risk as often being a catch-all for political bias. I think it's positive to depoliticize bank exams and instead focus on the core and measurable risks. Could you provide color as to whether or not any new or new?
So he didn't really say much, in my opinion, other than stuff that we already knew. Rates are not changing, if not until the end of the year, if that at all. It looks like they just continue to look for excuses. Why not? For a reason to not drop the rates. I get both sides sometimes, but I get really frustrated with identity politics. And I say that again, being biracial, I'm just, it's affecting more than just a specific group of people. Once you start going down that chain of, well, these people this and these people this, then it just opens the door for just nonsense. So, as a whole, it is hard. Like, in the housing market, yeah, looking for a house myself. For my family. It's tough out there. Greatest single thing I always kick myself about is not buying a house before COVID. And someone said, $250,000. And I was like, that's too high. It'll come down. Little did I know. Well, talk about being young and dumb. And now that same house built in the 1970s is $500,000. That hurts my brain sometimes. I drive around and I'll tell my wife, I'm like, man, $500,000. That thing right there is $500,000. No way. Of course, if you are a homeowner, you feel like you're sitting on something great. But the fact is, if nobody's buying, like right now, there's a lady I follow on X, Amy something. She's keeps track of all of Dallas real estate. That's where I'm at, in Dallas, Texas. And all the suburbs around us out here are like nobody can sell. I know people personally with $1 million homes that are struggling to sell, that are having to knock down the price. That in any other economy, all their other $1 million friends would just swoop in and buy it up. It's not happening. So while I get the uncertainty that Powell talks about, when are you ever going to be certain? You'll never be certain. Unless you're just saying, well, I'm not going to get into conspiracy theories. We're not going to do that on this channel. No tinfoil hats today. But this price action is kind of blah today. Right now, it looks like we're making another move up. See if we can take out opening range high at 130. Got about 20 more minutes on stream. My daughter said, "Aw, she's homesick today." I just don't like trading when Powell's talking because rug pulls are real. yesterday I left a lot of money on the table. I'm learning that whenever my first trade is a loss, I tend to cut winners short. My second two. I took 3 trades yesterday. First lost, the second one made it back, and then some, and then the third one would have made another 30 to 40 bucks, but it was moving, whipsawing so fast that I just missed it. I should have done a limit order. Limit orders are hard on options, in my opinion, because, well, they're not that hard. What I like to do, what I've started doing, is I'll pull up a dual screen like this, and I'll put the options that I'm looking at for the day. So let's say SPY, 24, calls. Then I see where we are. 6. This thing moves so fast. I saw a 15-cent option yesterday go to $1.75. That's $15 that went to $175. And my dumb self didn't take that trade. I watched it. Excuse me. Okay, so what are we looking? This one's technically in the money. 605, yeah. Which is what I like to trade. But just setting a limit order, I don't use the fair value gaps in the same manner on an options chain. I just haven't really ever tested it in that way. Because it's, I don't know, it's moving relative to ES, which is why I use ES to watch. But I don't know, I just haven't tested that theory yet. Because, you know, with options you have the Greeks theta, which it's basically helping the option go against you the whole time, unless it's going in your favor. Oh, excuse me. We got about 15 more minutes. Let's see. I just don't see anything at the moment. I mean, we can kind of watch this one to see how we do. I just don't know if it's going to be worth it. Like, there's some that just feel like no-brainers. It's like, yeah, I'll jump in on that. Some just don't. Here's the reality. We have the possibility to get all the way up there today. Also have the possibility of going all the way down here today. Or at least here. I don't know what that was. Alert, perhaps. Not since this morning. the overall market looking like? Yeah, I don't know those fair value gaps really mean anything because it's an options chart. All right. Excuse me. Time will tell here. I'm getting past taking trades just because. I just don't like the idea of it anymore. Thank you. That's all I wanted. Like, I would rather that happen, to be honest with you. I would rather it flush that out than give me a false sense of security and then do the flush on the next candle where I would be like, oh, let's take the entry here. Finish flushing that out. All right, here we are on the next one. If I do this, there's a very specific way I'm going to try it. Because I don't believe in it. Yeah, I just couldn't bring myself to do it on this one. I'd rather just wait and see. You just don't feel... Which means it'll probably... If it makes at least 20 to 30 bucks, I'll feel bad. Because that's kind of my goal right now. Each trade. 20 to 30 or more. And this just didn't look like that setup. Because the 4-hour high would be my target. So essentially it would have been about a 98-cent option, and it's kind of hovering around 103 right now. All wins aren't good wins. Because remember, there's fees. Still 103. Here comes $20. It's all right. That's all right. Highlighted just so it's a trade that, even though I didn't take it, you can still see it. I specifically would have waited for that one because I knew with the fair value gap being that small, it usually wicks underneath it like that and does exactly what it did. So the stop would have been this support level. I'm going to stay on, excuse me, a little bit longer just to see if it hits it. Which it doesn't look like it's going to. Ooh, that would have made me mad. If I had a limit order and I could have got $20, but I probably would have been looking for more because it just didn't hit my target. That's what I'm talking about. Just didn't feel like a great trade to take. Right there, they've been back at break even. If that thing wicks all the way down there and goes back up, that's disgusting. And I can't stand days like that. But I'll be looking for other opportunities throughout the day. I just won't be on stream. I'll post them in the recap. Look at it. He must have said something. Ooh, he must have said something. Gross. Glad I didn't take it again. All right, y'all saw. I'm taking this off now. Powell, man. Nobody can take a market like him. All right. We're going to call it today. I appreciate anybody who's watching this later. We stream every Tuesday and Thursday, 8:30 to 10 o'clock. Can get you some trading education, ask questions. Just come to hang out. We can talk music, whatever you want to talk. All right, y'all. Be safe. Do something nice for somebody. All right.